Welcome to Investors Insights, episode 195. Today we'll be discussing, will the Fed stop the market momentum? For our video watchers, we invite you to try listening to the same information on our podcast. Many people are discovering they like listening to it while they drive or exercise. So guys, let's get started.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy Team from Five Plan Partners.
A lot of information to cover today.
Yes.
A lot of information came out over the weekend. OPEC made the first deal in 15 years. So we're seeing oil climb up a little bit today. Big news this week is the Fed. The Fed is expected to raise rates on Wednesday. Trey, talk a little bit about that.
Yeah, so on Wednesday, the Fed starts a two-day meeting today, or Tuesday and Wednesday, and the Fed will come out and either decide to raise rates. It appears the market has fully priced in a Fed rate hike, which is very good. The Fed rose rates this time last year. The market really wasn't prepared for that. So historically speaking, the long end, which is 10 years, 30 years, which is most people's mortgages are priced on, and a portfolio of bonds is typically more impacted by that. That has already increased effective to 3 Fed rate hikes. And so the market is leading the Fed, which is great because that makes it a lot less shaky after the Fed makes a decision. You really want the Fed to be behind the market so that interest rates have already priced in any kind of move. Possible inflation has already been priced in, so we're in a good spot to where the Fed meeting may not be that impactful. Which what will be very important is not what they do this meeting, but what they're watching for the next year. How quickly are they going to raise rates? And that, a lot of that's more driven by economics, which Ashley brought up this morning.
Right.
Yeah, talk about some of the numbers, Ashley. You had some good information of what the Fed's looking
Absolutely.
at.
Well, Trey's exactly right. You want to be in a position where the consumer is kind of leading the Fed, not the other way around. And two numbers we'll have this week should support that. One is the CPI, the inflation index. Last month it went up about 0.4%. Economists expect that to be right on the mark again. Second month in a row at 0.4%. Now you extract out of that energy and food to a core inflation rate of about 0.1, but the point to make to you is we're starting to get some consistency in that. We're starting to get some inflation in the system. Likewise, on consumer spending, this should be, on Thursday, should show us that this is the third month in a row we've had robust spending. So the consumers, Fed notwithstanding, they're kind of plowing ahead anyway.
Right.
And that's what you want.
You really want, spending-driven inflation where people are spending more,
Correct.
they're making more. That's great news.
So we expect the Fed is kind of priced in that they're going to raise on Wednesday, but we're watching very carefully what they say. It's all in the verbiage.
Yep.
Looking forward, what's the policy going to be? Are they going to raise two times, or are they data dependent? So we're watching that carefully. Also, we've been discussing about how the U.S. economy has been really strong, really across the board. A lot of great economic numbers, but we haven't really talked about globally. Globally, we're looking really strong. We're really seeing a lot of reacceleration in growth around the economies around the world. So very positive on that. Actually, Strategic Research did a little some information, looked at some information, analyzed some data. And out of the 21 countries they looked at, 19 were growing. So looking very strong here domestically, but also great internationally. And that's very important to keep this stock market momentum going.
Yeah, we need all of it.
Exactly.
Yeah.
So a lot of information. Please give us a call if you have any questions. We love hearing from you. Have a great week. Thanks.